This video is sponsored by Morning Brew. Visit the link in the description below to sign up for their daily newsletter today. Ladies and gentlemen, welcome to The Plain Bagel. I'm your host, Richard Coffin. We made it to the end of 2023. Congratulations, job well done. Give yourselves a pat on the back for that one. As we quickly approach 2024, and as I look to get one more post out before the holiday season, I figured we would do another Finance YouTube Rewind. Look back at some of the big historic events of this year when it comes to economics and the markets. Because it might be hard to remember, but 2023 was a pretty eventful year. It might seem like all that everyone talked about was rising interest rates and artificial intelligence, but we had some other stuff happen in there as well, like the Titan submersible that was full of those billionaires. And of course, Barbenheimer. Remember that? Joking aside though, we did see some historic events when it comes to economics and finance. So with this video, we'll take a very casual approach to reviewing some of the highlights of the past year. But before we hop into that, let's start things off with a quick recap of how the markets and certain notable assets performed throughout the year. As you would expect, 2023 was a much better year than 2022, with the S&P 500 seeing a total return of around 25%, falling just shy of its all-time high. Here in Canada, the S&P TSX saw a return of around 10% itself, while the MSCI EAFE index, which is an international index, saw a net return of 16.6%. Bonds, meanwhile, did surprisingly well, with the S&P 500 bond index up 8% for the year, while the 10-year Treasury yield ended the year relatively flat. This despite the rising interest rates, signaling that markets are pretty confident of a rate cut next year. Speaking of rate cut expectations, those seem primarily tied to the cooling of inflation, which for November was 3.1% in the United States as well as here in Canada, which is still above targets, but less than half of what it was at the beginning of the year. As for other commodities and assets, gold was up 12.1% for the year, oil was down roughly 8%, and the cryptocurrency Bitcoin is up 162% year to date. That's right, we're back to 2021, baby. But those are the numbers for the year, and I'll take the opportunity to highlight, as I've done in the past, they shouldn't put undue weight on the short-term figures, and that past returns are not predictive of future returns. But hopping right into the timeline of major events for the year, we kind of started things off with a bang when the US hit its debt ceiling of $31.4 trillion on January 19th, kicking off a 3-month debt ceiling crisis as negotiations between President Joe Biden and then House Speaker Kevin McCarthy fell through. The government would be kept running thanks to extraordinary measures taken by Treasury Secretary Janet Yellen. An agreement to temporarily suspend the ceiling would only be agreed to on May 27th, a mere week before those extraordinary measures would be exhausted. On February 1st, we had a headline about the investment theme of the year, as ChatGPT surpassed 100 million monthly active users in just over 2 months, a record at the time, as the platform gained notoriety for its seemingly first of its kind chatbot functionality, being able to respond relatively coherently to pretty much any prompt given to it. It would signal the beginning of the generative AI gold rush, with companies scrambling to release text, image, video, and even sound-based generative AI systems, giving us some interesting creations throughout the year. Truly a remarkable frontier of innovation. Then on March 10th, we had perhaps the biggest finance event of the year, as we saw the collapse of Silicon Valley Bank, a regional US bank based in California that had seen an unprecedented level of withdrawals and significant losses on its bond portfolio that made it unable to meet those withdrawals, with many labeling this the regional banking crisis. The collapse came just 2 days after Silvergate, a crypto-focused institution, had announced that it would be voluntarily winding up its operations, and itself would be followed just 2 days by Signature Bank, likewise entering FDIC receivership. Meanwhile, the crisis as a whole would appear to eventually be stemmed thanks to efforts by the Federal Reserve, the Treasury, as well as the Federal Deposit Insurance Corporation, which included the introduction of a new lending facility, as well as guarantees for uninsured deposits past the typical FDIC insurance. But the issue would not stop with these companies alone, which, speaking of, on March 19th, we would see Credit Suisse, a Swiss-based GSIB, or Global Systemically Important Bank, be forced into a takeover by UBS after itself experiencing a run on deposits. Now, while Credit Suisse did have more deep-rooted issues at play here, it nonetheless showed the acute impact of rising rates on institutions with very long duration assets. The takeover marked the end of the bank's 167-year run. And on May 1st, Silicon Valley Bank loses its title as the second largest bank failure in US history to First Republic Bank, another regional California-based bank that itself fails thanks to similar pressures. The bank would ultimately see the majority of its assets acquired by JP Morgan in what was seen as an incredibly lucrative deal for the bank. Then, if trouble in traditional banking wasn't enough, on January 5th and 6th respectively, we saw the SEC sue Binance and Coinbase, two of the world's biggest cryptocurrency exchanges. While Coinbase's own lawsuit primarily involves unregulated operations, which really does bring up more questions about jurisdiction that are still being determined by courts, Binance's was a lot more concerning, with allegations of commingling customer funds and market manipulation. Both lawsuits are still outstanding. Then on July 20th, the Federal Reserve launches its FedNow service to offer instant payments for financial institutions. I did not actively pick the order of these headlines. But the system, which would more or less just replace services already offered by the Federal Reserve, would allow money to be transferred effectively instantly throughout the United States, compared to current systems, which can take a number of days. And while there were concerns and conspiracies around the service regarding surveillance and control of people's money, the launch was pretty uneventful. Then on July 26th, we see the Federal Reserve carry out its final rate hike of 2023, bringing the upper bound of the federal funds target rate to 5.5%, the highest level it's been in 22 years. The rate rises have done a good job of helping to stem inflation, but as we've kind of alluded to earlier, have broken a few things along the way. Thankfully, we had T-Swift to help pick up the pieces. As on August 24th, Bloomberg estimated that the singer's Eras tour, alongside Beyonce's Renaissance tour and the Barbie movie Oppenheimer double feature, were expected to contribute $8.5 billion to the US economy, representing a 0.5% increase in GDP. But not everyone was so happy, with some economists in Sweden blaming Beyonce for their stubborn inflation. Then in October, we saw rates for 30-year mortgages reach a 23-year high, topping out around 7.8%. The jump in rates reflects a similar 16-year high seen among treasury yields, as long-term debts slowly adjusted to the higher rate environment, though they've since come down on expectations of a future rate cut. Then, of course, while not strictly economics related, we have to talk about the October 7th attack by Hamas on Israel. An attack that killed 1,200 and was followed by retaliatory strikes and ground invasions on the Gaza Strip that have killed tens of thousands. Outside of inflicting horrors on the region, the conflict has been incredibly divisive elsewhere around the globe. And while we've seen temporary ceasefires and hostage exchanges, the conflict continues to take a devastating toll on millions. October 18th, China's formerly largest property developer, Country Garden, defaults on a debt payment. The struggles of Country Garden, alongside Evergrande, signal significant strain within China's real estate market that has been ongoing for a couple of years now. October 30th, internal documents showed that X, the platform formerly known as Twitter, is now worth just $19 billion, a $25 billion loss for Elon Musk from his purchase price. Elon Musk tells advertisers to go f themselves. November 2nd, roughly a year after the collapse of his cryptocurrency exchange, we see Sam Bankman-Fried found guilty on all charges, including wire fraud, conspiracy to commit wire fraud, and conspiracy to commit money laundering. While he's yet to be sentenced, SBF faces a maximum of 115 years in prison. And on the note of quirky startup founders, on November 7th, we saw WeWork, the shared office space landlord, file for Chapter 11 bankruptcy protection, as a failing company looked to restructure and ultimately cancel billions of dollars worth of its debts and leases. It marks the biggest startup failure in corporate US history. Adam Neumann, the company's co-founder, would follow up this news by putting out his first residential rental on the market under his new startup, Flow. On November 19th, we saw Argentina elect Javier Milei. Self-described as an anarcho-capitalist, the new president promises to ditch the country's local currency for the US dollar and effectively get rid of the country's central bank. While it's unclear whether an official switch will be feasible for Argentina, the move does run counter to other de-dollarization discussions throughout the year, with BRICS members specifically entering non-US dollar trade agreements and even pushing for a common trade currency. Then, November 21st, only a couple weeks after SBF's own guilty verdict, we saw Changpeng Zhao, or CZ, the founder of Binance, pleading guilty to violating the Bank Secrecy Act. Compared to SBF, however, the charges are much less severe, with the case being settled with a $4 billion fine payment and CZ being barred from the industry for 3 years. He's not expected to serve any jail time. Then, to end things off with another cryptocurrency dumpster fire, we saw SafeMoon US LLC, the company behind the SafeMoon cryptocurrency, file for Chapter 7 bankruptcy. The US Department of Justice is currently charging several SafeMoon executives with conspiracy to commit securities fraud, conspiracy to commit wire fraud, and money laundering. The moon proves meaningfully less safe than implied. But that is the year in review, 2023 rewind, if you will, for economics and finance. I'll also take the opportunity to provide an update regarding the channel and myself, I guess, in relation to the channel. But before we do that, I do want to give a quick thank you to the sponsor of this final video for 2023, Morning Brew, they've been an excellent partner for the channel. And if you find that you're having trouble recalling the details of these stories or maybe didn't catch them as they were happening, I got a solution for you. Morning Brew is a business newsletter that sends out content 7 days a week, covering all the major headlines on technology, finance, markets, business, all the topics the cool people are into. For example, they recently covered falling mortgage rates and the rental market, highlighting how the loans had recently cooled to the 6% range and how rents in the US have actually fallen 2.1% year over year in November. And truly, I've been reading the newsletter for a number of years now because one of the biggest selling points for me anyway is that it's a very light and enjoyable read. The writing is witty, light, and just makes consuming the news a pleasant experience. So if you want to check them out for yourself, you can use the link in the description below to sign up for the newsletter. It's completely free and takes just a few seconds to start receiving their newsletter. So thank you, Morning Brew, and now back to the video regarding 2023 for the channel and what 2024 has in store for the Plain Bagel. This year was pretty big for the Plain Bagel. We gained over 200,000 subscribers, with us now approaching 830,000 subscribers. It is crazy to think that there are this many people out there wanting to hear about finance and economics from me. But thank you, I really do appreciate it. For 2024, I'm hoping to keep the momentum going, kind of keep the same pace of covering some important news items that come up, but also touching back on some of the more basics, beginner-friendly stuff, so that people who are watching this channel aren't just getting up to date on financial news, but are hopefully continuing to progress their understanding of investments and finance as a whole. And I'll actually be releasing some new projects this year, so do keep an eye out for that. But before we get to all that good stuff, I do want to highlight, I'll be taking January off as a vacation. I know as my boss in this situation, you might be disappointed to hear that. 2023 has been nuts, and I'm going to take full advantage of a break. I'd recuperate, spend some time on some topics I've been really excited and interested in covering, but just haven't really had the time to prepare or flesh out the details for, and hopefully keep the content fresh, entertaining, and educational for everyone. But yeah, I think that's where we will wrap things up. So thank you guys for joining me today, for sticking around for the past year, and I'll say it again, for all your incredible support and just positive feedback for the channel. I consider myself incredibly lucky, not just in terms of the size of the audience, but truly with the caliber and quality. You guys are incredibly supportive, which is very rare, very rare to find online. It really does mean a lot, and I really am incredibly thankful that you guys have given me this opportunity. But that's it for me. I wish you happy holidays and good health, and we'll see you in 2024. Bye for now.